Hi friends, welcome to WFYI Technologies. I am CA Green Agarwal. Today we are going to decode one of the best tax planning solution for middle income group. Yes, I am talking about section 87A.
So let's have a basic understanding of section 87A. First of all, who can claim this deduction under section 87A? So only resident individuals are eligible to claim these deductions. NRI, Hindu undivided family, companies and firms or any other entities are not entitled to get benefit of section 87A. So let's check how this will impact your new tax regime. Maximum allowed 87A rebate under new tax regime is 60K. If your income is up to 12 lakh rupees, then you will have to pay zero tax on that income. And the standard deduction of rupees 75K is over and above this rebate. So let's suppose you have a salary income of 12.75 lakh rupees. In that you will get 75,000 standard deduction, then your net taxable income is 12 lakh. In that, if you calculate tax, then the tax amount will be, as per new tax regime, this is 60K. And here 87A will provide you total deduction of 60K and effectively you have to pay zero tax. Now let's check what is available in old tax regime. Section 87A rebate also applicable for old tax regime. In old tax regime, you will get benefit of 12,500 only under section 87A. So if you calculate on income up to the 5 lakh income, you have to pay zero taxes. And standard deduction is also reduced to 50,000 in old tax regime. Impact of section 87A on new tax regime and old tax regime. If you adopt for new tax regime, then you have benefit of 60,000 under section 87A. In old regime, this is 12,500 rupees. Up to 12 lakh of income, you have to pay zero taxes. In old tax regime, you have up to 5 lakh rupees, you have to pay zero taxes. You will get benefit of higher standard deduction. In new tax regime, but yes, in old tax regime, you have benefit of multiple deductions like 87, 80C, 80D, HRA, etc. These benefits are not available in new tax regime. This old tax regime is better for those persons who have higher deductions, more investments, and actually who can avail a lot of deductions. In that case, you should go with the old tax regime, else you should choose new tax regime. So what is critical for section 87A deduction? Any specific rate income, you will not get benefit of section 87A. If you have any specific rate like capital gain income, then you have to pay tax on that. You will not get benefit of section 87A. Let's suppose your income is going above 12 lakh rupees in new tax regime and 5 lakh rupees in old tax regime. Even if you are going up by 1 rupees, you have to pay taxes. 87A benefit will reduce it accordingly. And residency requirement, because since this is available to only resident individual, so you have to ensure that this deduction is provided to resident individuals only. So what is key takeaway and action steps for section 87E? If you have a fewer investments and deductions, then you should opt for new regime. If you have higher deductions, higher investments, then you should choose old regime. Also, you have to take care of capital gain taxes, and according to your situation, you should adopt your tax regime.